please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Let's shift focus to some key earnings now. Titan has reported a robust performance in the quarter gone by, driven by the jewelry business. Naveen joins us with the earnings fine print. Good morning, Naveen. Tell us more.
Good morning, Anisha. Titan is expected to be the stock of the day. If you see two key things, actually Titan has been a green tick across all parameters. One being that the consolidated margins, that has been at a multi-quarter high. Also, the overall revenues have been strong and way above what the street was expecting. Maximum revenue growth in the street was close to 20-21%, but that has come in at 29%, led by a 37% jump in the jewelry revenues. Now, just to break up the top line, as I already told, has grown by 29%, led by a jewelry segment growth of 37%. Even watches segment grow by close to 14%. On the other hand, the margins, which were at a multi-quarter high, at around 11.5% versus the expectation of maximum 10.2%. Also, the PAT growth, that has come in at 67%. Now, remember one thing, the watches as well as the jewelry segment, they have been the outperformers. The jewelry growth has been 37%, but the margins over there, because of the jewelry sales being more into the marriage season, that has increased by close to 14% from 10%. On the back of this, brokerages have most of them have an overweight on an outperform rating. Morgan Stanley has an overweight with the target price of 920. Macquarie has a target price of 907 on the stock. Back to you.
All right, Naveen, thanks a lot for that. And as you put it, it is diamond at the price of gold. That's Titan. But let's move on from Titan to the infra stocks. They'll be on the radar. NHAI cites default and terminates 20 contracts with companies like L&T, HCC, SL Infra, as well as the likes. Anisha, what exactly does this mean for these companies?
Well, yes, this is what our colleague Ashpreet picked up over the weekend, that there was a notice put up on NHAI website that talked about 20 projects that have been terminated by the default of the contractor, and hence the NHAI has gone ahead and told these contractors that you would not be able to bid for the PPP and the EPC projects up till a certain date. For most of these contractors, it is 6 months to 2 years time that they have given, that they will not be able to bid for any of these contracts on technical grounds. Now, if this holds true, it'll be a bit of problem for all these companies, because remember, all the Bharatmala projects are expected to come in, and this would mean that all the companies like L&T, HCC, Ashoka Buildcon, Madhukon Projects, Supreme Infrastructure, SL Infrastructure, all of these companies would not be able to bid for any of these projects. However, what we are gathering from the corporates and other analysts is the fact that many of these companies have already made representations, and as per them, the order stands withdrawn. This is the official word that we actually got from HCC as well, where they talked about that the order has been withdrawn. L&T, on the other hand, told us that the project was terminated because of force majeure, and it cannot be treated as any default on account of the concessionaire. So it is an ongoing and developing story. The timeline has been given till November 6th, which is today, for all these contractors to make representations, and then the final order will come from the NHAI tomorrow. Bank of America and the others have written on it. They say that the order can go either side, but for L&T, Bank of America says that even if it does happen, the price target for the company will not change by more than 5%. So initially in all these counters, we may see a sharp downtick, but they should recover by the end of the day, because perhaps this is just a stern action taken by NHAI, and maybe the order would be taken back.
All right, Anisha, we'll keep an eye out on all the price action there, indicating that if there is a dip at the start, could recover. But we'll slip into a short break. Come back, we'll focus on the big deal coming in from the pharmaceutical space. Torrent will acquire Unichem India and Nepal business for 3,600 crore rupees. More on that when we return. Official now, we told you first, Torrent Pharma will acquire Unichem Labs branded formulation business in India and Nepal for 3,600 crore rupees. Ekta, who's on top of this story, is here with all the details. Ekta.
Well, thanks, Mangalam, for that. Well, finally, the deal is done. After months and months of speculation, they finally announced that they're going to, Torrent is going to be buying Unichem's domestic business. Now, I just want to put things into perspective. The deal is around 3,600 odd crores. It was worked out to be around 4.2 times FY17 domestic sales. It was a little higher than what was anticipated. We were anticipating an upper range of 4 times. But nonetheless, it's looking like a good deal for Torrent, and that's what the general general consensus is that yes, while the interest costs are probably going to spike in the near term, eventually the deal is going to be EPS accretive, possibly in the next 3 odd years. Now, Torrent will also augment itself in terms of the market share position that it has in the domestic market. Also, it will probably become one of the top 7 to 8 players in the domestic market as well, vis-a-vis its ranking of around 13 to 14 at this point in time. So it's a huge leap in terms of where Torrent will go from to where it is to where it will go from. But again, it is probably going to be funded, or it is going to be funded 70 to 75% via debt and 20 to 25% via internal accruals, and hence that interest cost is going to rise in the near term. But the street is probably going to look at the synergies of the deal, which are expected to be far greater than the near-term debt concerns, and also going by Torrent's track record of the earlier Elder acquisition which took place in 2013, the integration of that deal which took place eventually, and hence the synergies and how they have actually helped in terms of the brands, Shelcal, etc., sustaining in terms of sales. That is the expectation from Unichem's brands such as Losartan as well. Plus, they will be entering the OTC or over-the-counter segment with Uni-enzyme. So this is a space which Torrent is not in. So overall, while the interest costs would probably be a concern in the near term, the overall deal is looking good according to most analysts. For Unichem, however, I expect the stock to probably be in the red, because the management, we did speak to Dr. Modi on Friday evening, and Dr. Modi said that 50% of the shareholders' funds are going to be invested back into the business, and hence maybe that could be a bit of a concern. But let's listen in to the management.
If we have to move from what I call vanilla generics and get into complex generics or new chemical entities or new biological entities, you would agree that's the future. And clearly, with the kind of footprints we've been able to make in a relatively short time in the developed world, particularly because of our formulation capability and our R&D backups, we felt this was the right time when we should make more investments in this. So one part of the proceeds would be after tax, obviously, to see that we really fortify and grow that business. At the same time, we would certainly want to reward the shareholders who have been with us all this while. As far as the formulation augmentation is concerned, maybe it would come to a couple of 100 crores. And then the R&D, as you know, is an animal which is very difficult to fathom. Because apart from the Para IV filings, you do know that today the US government is making life really tough for the pharma companies, whether it is the general drug users fee, whether it's the DMF filing. Obviously, our idea is to step up our number of filings so that we are able to, as of today, filed and already applied for are nearly 60. And in the next 3 years, we would like to cross the 100 mark.
Okay, let's move on to something that is making headlines in the world today. The second act of Panama Papers has broken out in newspapers the world over. The Indian Express reports that a German newspaper has obtained about 13.4 million documents of two firms, Bermuda Appleby and Singapore Asia City, which deal for clients with 19 tax havens across the world. Now, the Indian companies whose documents figure in the second tranche of the papers called the Paradise Papers include the likes of Sun TV, Aircel, the Indian companies whose documents figure in the second tranche of the papers called the Paradise Papers include the likes of Sun TV, Aircel, GMR Group, Jindal Steel, Havells, Apollo Tyres, Hindujas, the MRMGF, Videocon, DS Construction and the Hiranandani Group. Now, the Bermuda Appleby is a 119-year-old company and a leading member of the global network of lawyers, accountants, bankers and other operatives who set up offshore companies and manage bank accounts for clients to do the following: avoid or evade taxes, manage real estate assets, open escrow accounts, purchase airplanes and yachts paying low tax rates, or simply use offshore vehicles to move millions across the globe.
These papers, they are being investigated by the International Consortium of Journalists, investigative journalists, that is, whose Indian member is newspaper Indian Express. Express has stated that it has been investigating these papers for over 10 months now and will file details of its investigation over the next 40 days. The ICIJ published the following disclaimer with regards to data provided. There are legitimate uses for offshore companies, foundations and trusts. We do not intend to suggest or imply that any persons, companies or other entities included in this list have broken the law or otherwise acted improperly. With that, we'll step into a short break, come back and we'll focus on the cues to watch from the futures and options space.
Shifting focus to the action in primary market now, Reliance EMC is set to make its stock market debut today, and Abhishek is here with all the details on that. Good morning, Abhishek. Take it away.
Good morning, Anisha. So the third largest AMC is going to list on bourses today. The issue price was at 252. So if you look at the IPO size was about 1,542 crores, and the whole market cap expected was close to 15,600 to 15,700. It saw a very strong subscription. The overall subscription was over 81 times, with institutional investors at 118 times, HNI at 209 times, while retail investors were at just 5.5 times. You look at the listing scenario, the overall listing scenario, and how the valuations will stack up between 240 to 272 rupees that I have taken as a price band scenario. The market cap to AUM percentage will be between 4.05 to 4.59. Typically, mutual funds are valued at around 3.5%, but this is on the higher side, and this is the first listing that is coming out. And you look at the AUM breakup also, it is divided between debt to equity, debt about 60-70%, and the rest is equity. The main strength of this franchisee is that they have a wide distribution network. They also have a good inflow that they are seeing, high dividend paying, and ROE for last 5 years has been at 20%. Back to you.
All right, Abhishek, thanks a lot for that. We'll keep an eye out on the valuation of that, the first asset management company. But let's shift focus to the cues coming in from the F&O space. Over the last week, while the FIIs, they've been buying in cash market, they have been pruning their positions in the index futures space. If you take a look at Friday as well, we saw sell figure come close to about 420 crores, some bit of skimming of profits taken at the higher end. If you take a look at the long editions, close to around 2,200, short editions were close to 6,900. Now, if you take a look at what is taking place in the index futures, the FII long exposure index futures, the start of the week, last week, they were at about 70%. That has gradually come down to about 64% as of Friday. There was a purchase of close to 598 crores in index options too. And out there, the FIIs, they went ahead and bought about 26,000 long contracts in index puts and added close to 11,900 short calls. So some cues of caution coming in really from the index futures and options space. Though remember, an upside on that could mean that all of them would be running for cover, providing a little more fuel as far as the upside is concerned. In terms of stocks, watch out for SAIL, Ujjivan, both of them saw some fresh longs. Arvind and Jet Airways, the consumption space really has been doing well, so that one saw some fresh long build up too. Reliance Communications comes into the F&O ban, as well as Walk Pharma, which is out of the F&O ban. With that, it's time on this edition of Power Breakfast. Stay tuned to CNBC TV18 Bazaar Morning Call. That one comes up next.